The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, and noon, 11 o'clock till noon. And we're looking at a market that's really struggling here. It's down, Dow's down 257 at 16,191. S&P is down 27 at 1911. Compound index is down 87. Is that an 8 or a 5? 57, sorry, at 45.82. Let me just do this again. Comp index, COMPX. Just couldn't see it there. Yeah, minus 57 at 45.62. The VIX index, now we need to go to the VIX index right away because it's very important. Until the VIX starts to pull back decisively from the 9-period moving average, up there it is. 2220 is the 9-period moving average. Today's high is 2202. And it is pulling back, but not pulling back enough to create a difference. Let me just check my little 1-minute chart here. Yep, there it is. Okay, that should be starting some kind of a bounce right now as we speak at 1905. I can just tell you this, if it breaks under 1902 one more time, that'll be a big disappointment to the market. This is the E-minis, of course. It's the 120. Yeah, look, in the 120-minute chart, made a peak not holding the trend line very well. Let me just move that trend line a little bit to the side here. In fact, I should make an arch from, the H pattern that's going into a cup pattern. That would be the best thing that you could see, because without that, it's going to really struggle. Nice action here right away. I should lean over and go click, but I promised myself I won't do that during the show. Okay, so the VIX index is, in fact, starting to pull back. It's up 153, but the high was 2202. And it needs to really get down to the 2120s to be able to see a market move that'll be not sustained, but at least be sustained in the very near-term charts like the 10-minute chart. That'll be very important. The second thing is that if there's a rebound at any point in the VIX index to go back to the 22s, this market will really start to take out the lows. What's really important is that the Dow holds the 220, so that's 16,220. Now that 9-period moving average is at 16,204, exactly where the Dow is at this point, 16,205. I've still got some technical indicators that are saying that this is very positive. We still remain long in a core position, substantial core position from the 215 time frame on the 20th, when the Dow dropped almost 600 points and was starting to come back. So we are long from 16,650. And now the Dow is at 16,204. So we've got a bit of a cushion, and we've had trades in and out. This morning's did not work. Others have been working quite nicely. So this is going to be very important. Just want to have a quick check here. Yep, the VIX index did go to 216, and that suggests that within 2 sessions, might even include today, but within 2 sessions, there should be a rebound as the S&P E-minis start to rally quite sharply between 9 and 11 points, which should reflect positively in the cash index, but it doesn't say how strongly. And then you've got to be careful after that rally is complete. So let's just go on here. I want to do the, I wanted to show, so this is the 200-period moving average in the VIX index in the 120-minute chart. It's under that early on, and then it bounced up. Now it needs to go back under 20.78. That's the only way you're going to be able to sustain some kind of a decent rally. So let me show you the E-minis here. I was about to do that, and then I got sidetracked. I sidetracked myself, of course. So this is the ESH16. You see that arch formation? You see the 200-period moving average, the orange? You see if I can pull the chart right back here. We just missed going at 1940. We just missed going to the 1946 left side, right side price time match of the 13th. So this is going to be very important. How do we come out of this, or does this arch, does it form a cup formation or a V-shaped formation over the next 4 or 5 hours? Or are we going to dip below into the 1890s and then start to trade in a different level, at a different level altogether, trying to tackle this very big green bar of the 29th, where the E-mini went from 1888 to 1907. That's going to be the issue. So this is a very important period. But if I go back to my daily chart, peak C in both the S&P and the Dow, and that says there should be a leg D to the upside, and a lot's going to happen depending on the support levels that I just discussed. Now let's go on to the QQQ. That's the NASDAQ Index 100 trading vehicle. Held the 9-period moving average beautifully. It's at 103.42, down 1, down 0.95%, down a little bit less than the down the S&P. And it looks like, I don't want to do it. I can. The moment that if the Qs cross 104.80 in the next 3-4 days on the upside, I'm going to put an up arrow to say that's leg C, and there should be a D, and there's a good chance that we will go higher after that. But weekly and monthly charts, the jury is out. This is just the very beginning. It's just the very beginning of this particular phase. Now let's go on to the IWM. IWM. Look, the IWM, a lousy chart in the weekly. It's a leg A. Only a peak B in the daily, and not really a very good, not a V-shaped pattern. It's sort of arching over. So this is going to be very important. Let me do one thing. I want to look at the NYA, and then we're going to go into the commodities, etc. So the NYA is New York Stock Exchange.X. There we go. Also, this made a peak. Well, it's making a peak B today. There's no new high bar. And what's really important about this is that it's leg A up in the weekly chart, and it hasn't yet got even close to the 97.17 level, because it's at 1945, down 169 in the weekly chart. That 97 that's 9-period moving average. 98.60 is the 200. I'm not sure if this rally is going to be able to get there, but we'll see. Now I'm regretting the fact that I didn't hit that button, the buy button on the, I had it already. A, B, there's a leg C up. This is the kind of move that you love. Okay, but it doesn't matter. There's plenty of it. There's always another trade. Well, let's go on. And now we're looking at the gold contract. And gold at this particular point is down $1.40 at 11.26. This chart says it's in leg E. Now, it might have recycled, but I'm calling it E for now because why? It's right up against the 200-period exponential moving average. That's the pink, the orange line. And the light blue line is the 200-period SMA. That's the simple moving average. And that's the one is at 130. It's already touched that once today. And the other one is at 11.33, I think. Let me double check here. 11.32.50. So this is going to be an area of resistance probably for the dollar. But wait a minute. That means for gold. Wait a minute. Does that mean that the dollar? Yeah, the dollar's actually holding well. It's under the 9-period moving average yet again. But so far, it's really not too bad. The weekly chart is making that arch formation. I need to talk about this a little bit more. I will talk about it when I get back, and we'll look at request in the den for both bonds and the VR and VRX. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, back again, and gosh, I got a bunch of calls. I don't know if this is an F or a G. I'll have to just check it out earlier on. So I had questions about Google. I had questions about JP Morgan, XLF, XOM, XOI, crude oil, what was that? Vertex. But let me do this quickly before I forget it completely. The VRX, which is Vertex Pharmaceuticals, I think it's called. Yeah, Pharmaceuticals International. In leg B in the daily chart, it's at 98.59, up $2.92. Remember, this is a stock that just got smashed because of pricing, etc., all the way into that whole October period, and then it sort of settled down, and it's just been trying to rally ever since then. It had a spike from the low that it made back at that was in November at 69.33. Had a round number close. That was good. 60, I don't remember what I said, 69.33, I think I said. And right now it's at 98.57 with the weekly chart, had that peak B and it's pulled back. So this is really quickly. Let me do this. The question was in the 120-minute chart. Yeah, I believe that this is probably a breakout right now. It hit the 200-period moving average. I'm going to call it leg B. I don't know what else I can call it because it's not a recycle or anything like that. So it would fail if it turned down from 98s down to the below 92. But at this point, I think it's going to squeak its way, struggle to get to the 100, back to the 101.40 high today. And then I think if it pulls back and the next bar starts off in the 98s, then it's going to have to work quite hard, but I think it will make a C and a D. So I hope that helps you, Paul and the Dan. It is acting reasonably enough to say that the downside is probably limited right now, but perhaps so is the upside. But the upside can go to a leg C and a leg D below 105. So I'd say it's got maybe 6 or 7 points on the upside if this trend, based on the MACD and stochastic being good in both the daily and weekly charts, continues. So far, so good. All right, let's go to Mike in Lakewood, California. Mike, how are you?
Oh, fine. Good morning.
Good morning. You'd like to look at
Caterpillar, CAT.
Do you have a position at all?
I've got puts right about where it's at. It looks to me like it's getting ready to head back down into the 50s. It's had a huge spike up on terrible news, which I'm assuming is short covering, but
So yeah, okay. Let's just go through this and do it. I'm going to try to do it as objectively as possible. Let me just grab this 120-minute chart. That's A, B, C, pulls back, continues to D, E, and now it's pulling back. Okay, good. Now let me put that aside. Let me look at the, and the monthly chart is at, really it's almost like a 1-to-1 in the monthly chart from the high that was made at peak B minus back in July of 2014 at 111.46. It goes down to trough C in the Chapman wave, 78.19. 78, could I remember now? 78, 111. So that's 22. 33, so it's about 33 points. It spikes up to 89.62. Take away 33, and you've got yourself 56. And what is the low that was made just recently? 56.36. So it's made a 1-to-1 exactly downward move, and that's that A to B equals C to D. That's the classic that we look at here at TFNN. It's the lightning bolt pattern. And then it had a bounce, and a bounce back where the most obvious place would be the monthly 200-period moving average of 63.65, and it's already hit that, and it's pulling back now. This is going to be the issue. The way I'm looking at Caterpillar, because it is in an area that we've seen in the whole commodity sector, we've seen so much in the way of selling. And even the rally that we thought, at least I thought, was going to have a little bit more legs in some of the other materials like fertilizers, etc., hasn't really come about yet. At least there was a spike up, but we haven't really had a decent rally. So I'm looking at this, and I think that you're right. Could you tell me, is this January, February? When are the puts expiring?
Oh, February. So I've got about 2.5 weeks.
Wait, February, I said January. We're done with January. What am I talking about? February, you've got about two and a half
2 weeks from this Friday, so that'd be 2.5 weeks.
So that's two. Okay, that's what I wanted to know. So, and you got them at about 61 or 60?
Yeah, I've got the 60 puts. So I'm in the money on part of my position and out of the, and a small loss on the other part.
Okay. So the way I'm looking at this is that the MACD and the stochastic in the weekly chart are suggesting that unless the daily can really lead the stock price up into the 65 to 66 area, the MACD and stochastic are going to be kind of flat. So they're not telling me anything. They're not telling me anything positive, I should say, at this particular point. But this is the issue. The spike that we saw to the peak A with a gap and then an item reversal back down, and then a big spike to the upside with a slightly higher high going to that 63.08 area on the first. The pullback that we've got today, the 2nd of February, is saying to me that there might be a little bit more room on the short term, but you've got to be very careful because when you've come down this far, this sharply, and with the momentum so great, it means that if there's a bounce, the bounce doesn't have to go very high, but it doesn't have to come back and do a retest for quite a while. That's my concern. So I'm going to suggest to you that we both look at it in the worst case scenario and hope that it's the best case scenario for you. The worst case scenario for the stock is, at this particular point, is to test the wick of the candle of the 28th, and to go to 60 at any point, even on the 120-minute chart, if it starts to trade under 60 in the 59s, for the stock, that's a negative because that's going to say, arch formation. You don't have to go down very far, but you could take your time by coming down to the low that was made on the 28th, that was at 58.57. You don't have to break the low. That is the major low that was made on the 20th of 56.36. You don't mind 58 because that's still good action. Now, on the other side of the coin for you, the worst case scenario is that it's pulling back 2.49%, much greater than the Dow and the S&P at this particular point. But tomorrow it has a bounce. And that bounce says that it goes into the body of this candle right here, the candle of yesterday. If it does that, the way I'm looking at this, you could have, and it's not good for you because it could be a 2.5 to 3 week bounce that doesn't take Caterpillar back to the 58s. Instead, it tries to go for the 63.5 to 64.20 area, but it's building a base, and it's going to take its time before it either comes back or the weekly improves enough to go higher. So now let me just quickly sum up what I'm looking at. Because of the depth of the move down, and because this is the second move to the upside to give you a peak B. Every other one's been peak A and minus. It just kept failing. This is the first time it's gone to a B. It's suggesting to me that there's actually some internal strength here, or let's call it residual strength, and that residual strength could have a bit of a bounce. Could you hold on? Because I'd like to just give you...
I need to go, but thank you very much. I understand what you said.
Okay, so just be careful of the bounce. You might want to take some profit now. You can always put it back.
All right, thank you.
Thank you very much for calling. That's Mike in Lakewood.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Let me just go right to U.S. This is the T-bonds. Oops, don't type it on the chart. Type it into the little box over there. Got it. And here we go. So, bonds are up $2. This is $2.08. That's at 162 and 25/30 seconds. Legs seen the daily, legs seen the weekly. Now, you remember the trend line that I drew? You remember the pattern that I call the Chapman wave falling axe, where lower highs and much lower lows making a cone formation? Well, look what happened. Snap, it broke through. Remember I said it's broken through. It's very important now that it tackles and takes out the left side high of the week of the 28th of August. It did that, and now I believe it's a leg C, and this is the cup. Oh, wait a minute. 163 and 5, 162 and 31. What's really important about this, there'll be a Chapman wave cup and ladle pattern, and that's an extremely bullish pattern. If, let me just finish this. This is the left side. This is the right side. Grab it. Oh, it disappeared, huh? It's there. I know it's there. There it is. Put it to the right. Taking it out in a shorter period of time. That'll be good. Okay, so there's basically a cup pattern, and that cup pattern says, when you see this pattern going back to the left side lip, if there is a breakout in leg B or C, and it's powerful and you close sharply above it, remember this is that inverted H pattern, and that means it goes above the high that was made at 163 and 5/30 seconds in the continuous contract from January of 2015. That says not only is it very positive, but it should go to at least a D before coming back to retest the lip on the left side. So that's saying bonds are very positive. Yields are coming down. Remember the Japanization of our bond yields? And we first have to break out. That would say that if we pierced it and closed in the 165s, you've got to really take it out decisively. So I'd say your high 164 to the low 165s on a weekly closing basis. That's going to suggest it goes even higher with very little of a pullback. Okay? And then the monthly, is this a brand new leg B? Oh, man. I don't want to get there. I'm just going to say it's very positive what we've seen before. You remember I spoke about the Chapman Wave inside track that has always been good for bonds? Now, is that saying to me, hey, bonds are going higher, surely the market should decline? I think they, in a sense, they're two separate things, and that's going to be very important. What happens if there's a breakout to a new high above the high that we were looking at, 163 and 5/30 seconds from January of 2015, in the monthly chart? Is that now an F, or is that a brand new B? If that's a brand new B, bonds are going much higher and yields are going much lower. This is one step at a time. Let's just wait and see what happens if and when it breaks out, because that's incredible. All right, and the TLT, maybe that's a little bit better, because the TLT has to go all the way from 128.18 where it is right now in a big spike that looks like it looks like an E right now, but I'm going to have to call it a leg E/B in the daily, and this looks like leg C. Yeah, leg C in the weekly. It has gone to leg C in the weekly. It's still very positive. And the stochastic in the weekly is at 86%. That's very good. So look what's happened in the TLT. You're not at all-time highs, unlike bonds, the continuous contract. So this is very different. This is a retracement mode. Okay. So I hope I answered the question there. What would fail if bonds were at 128.19? If there's a suddenly big market rally, and this market rally says money's going from bonds, the safety of bonds, into stocks, you will see the TLT come back sharply. But that 125 to 124 area is huge support. Let me just go back to this 1 minute chart. Oops, this is the 1 minute chart. Just want to check it out for those of you who are trading. I would follow up. Look, there it is. There's the, we just broke out to D. No, we haven't. We are within seconds of getting to a D. Yep, that is a D. All right. So this is very positive so far. Just on a short-term basis, you really want to see the Dow get to minus 175. That's going to be the big test. Does it go back to the minus 225, or does it start to get better and better over the period of the day? I was anticipating that it would get better and better on over the period of the day, but we did take a small loss in the short-term trading position that we wanted. Our core position, of course, benefits tremendously when the market keeps coming back. So now let me just quickly scan. So I did the VRX, did bonds. Now going back here, the next question was crude oil, USO. See, this is my problem here. The USO is the weekly chart had a big move in the MACD, and yet it wasn't commensurate with the move in the price. And that just says to me, this is not gold. Remember tonight, Tom O'Brien is doing a special webinar on the currency relationship to all the gold stocks in different countries and what it means, and how he had a fantastic run. I think you're speaking about 100% move up in, was that Harmony? I can't remember now. One of the South African stocks. That's great. So I advise, if you're really interested in the golds and the gold stocks, go to the webinar tonight. You will not regret it. Tom always comes up with different ways of looking at what happens to the mines, the miners, the costs, and how this works out with currency exchanges. So, okay. So the question was USO. So USO to me has held the low of 7.92, and it has gone all the way, big percentage gain, to 9.88. A dollar, that's 12%, but now it's back again to 8.75. I don't see anything yet, but now if you are interested in buying the USO, my suggestion is that if it takes out today's low, or let's make it the low of the 25th of 8.54, I just be really careful. I wouldn't be long, but if you're in it now, you're nibbling. If it has a nice move up tomorrow, going towards the 9.11 9-period moving average, hey, that's okay. Then just have a trading stop. But this is the start of an attempt to rally. My opinion is that crude oil is still in the area where there's just a glut. That's my thinking from what I can read. It's not my expertise. Maybe you should wait for Andy Hecht, and you can talk about it. Send him a question. Next one was XOM. This is ExxonMobil. Holding very nicely from that low that was made at 66.55. It's already gone to 85.20%. It's like a 30% gain. Now it's pulling back. And my suggestion here is that if you're looking at a different stock, you can give it a 6% or so leeway. But I would say be very careful based on the patterns that I'm looking at, because if Exxon closes and starts to trade for 1 or 2 days below 73, there's a real good chance it's going to at least try to test the 71.55 level. It's very important for Exxon this week on this Friday, to close above 77, above the 9-period exponential moving average. Okay, next question was let me just get this. JP Morgan. It's almost the same kind of chart pattern we're looking at. I don't see that JP Morgan, I would not be, if you're short, that's good. But JP Morgan has a lot of work to do. It has to take out the high of yesterday and really close decisively above 59.65. It's trading at 57.46, down $1.41. Look, together with the XLF, this is an area that's really struggling. And I keep talking about lower yields. That's really not so good for the bank stock. I'd be very careful. I just don't see much of an upside move at this particular point in the bank stocks. And we'll look at the IYT as soon as I get back. That's a little bit better here. I think there is a bit of a bounce coming. I'll be right back. Basil Chapman, Tiger Dinesh this hour. Dow's down 187.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, real quickly, the IYT, the iShares of the Dow Transportation Average ETF is at 122.72. It's down 2.18, down 1.75%. Yeah, it's a struggle. It's a peak A, peak B, making a peak C here. It's really not a great pattern at all. I do think that at some point it'll fail and have to do a retest of the low that was made back in January the 20th. Is that correct? Yeah, the week of January the 22nd, right? At 114.91. It's really working hard. It has to get over 130. It's at 122, 123 right now. So it needs to get closed decisively above 130 to show that that weekly and monthly chart has enough strength to go up into the 136 area. This is better, but it's not great at all. Let's go to Brent in Martinez, California. Brent, how are you?
Good morning, Basil. It's always a pleasure talking with you.
Yes, I'm looking forward to this. You wanted to discuss a little bit more. We didn't have time yesterday. FMSA is Fairmount Central Holdings, and fire away. The floor is yours.
Thank you. I'll try to give you the condensed version. Basically, what I had done, it was that stock and several others that I had on my list. I was watching patiently, and it all kind of stemmed from. In 2015, I had taken a decent chunk of money out of the market that was going to a lot towards some of these stocks I had been watching and was really waiting for an opportunity in the market, which presented itself at that low we had in January. And just the way the market had come down, to me, was kind of reminiscent of at least the way it acted that day. That reversal that day was a lot like October 2011, and that's really what I was waiting for. Was to get that signal in my mind that gave me the best opportunity to then go ahead and implement those trades, which is what I did. And the one that was the best acting was, FMSA. I like I told you, I bought 10,000 shares, and I sold actually on Friday. I sold 8,000 of them at $2.50.
Nice.
Off the original, $1.10 purchase, but. Not all of them worked that well. I mean, most of them, they all made money, but that one percentage-wise was the best.
So just tell me, in your analysis, what made you think that this was the low and not, let's say, the low that was made on the 28th of October when it went to 221, which also was after a number of days of going down?
It has been so beaten. Just a lot of areas that I've been watching. And then the market in general, it all seemed to kind of get washed out that day.
Okay.
So, I mean, and there's no guarantees on any of these trades. I felt...
Of course, right. We know that.
In the trade, and I was willing to give myself a certain percentage. To me, the stop was going to be the low of that day. If it, were to break that at all, I would be out.
Okay, so
yeah.
what you had was you probably had a mental stop because you were following it so closely. But if it did take out the low of the day, that would say to you, "Uh-oh, not ready. It had every opportunity. I better try again some other time."
Yeah, I mean, fortunately, it's been my experience with the ones that give you the quickest gains, that do what you want the fastest. Have always been the best trade for me personally. And so when I get something that is giving me everything that I had hoped for and more in a short period of time, I just take the profits, and I have kept a certain position, to work with, but I just, I want to take my money out of the market and preserve it for, like I said, there's always another trade, and so that one already worked very well, and so then I just kind of move on to other stuff.
So now you've kept about a third about a fifth of what you had, and it's at 235. It didn't even go below yesterday's low after all this. So tell me again, they're in exactly what in the oil industry?
I believe it's not exactly like Silica Holdings, but because they do other stuff with the silica sand, but I believe there's some others like High Crush, and there's about a few of them that are in the same general area, and it has to do with fracking, the oil sector.
Okay, yeah, it's so interesting. I'm trying to think where I was a couple of days ago. Oh, that's right. I was going down south on Route 44, and we had turned off somewhere. And on the left, suddenly there was this big pile of stones, crushed stones. And I said to my wife, "Oh my goodness, I completely forgot about it." My grandfather, when I was a kid, a teenager growing up, he had a stone crusher at one point from one of the mines. They have to pull out all these stones, but the big stones, there's nothing you can do. So they used to crush them so that it was more viable. You could use them and for building. So he had a stone crusher, and I completely forgot until I saw this image on my left, and I said, "Oh my goodness, I hadn't thought of that for years." So it's very interesting because there are so many facets to digging or mining or anything with residual stuff that comes out. I mean, like sand and everything, that there's an industry within an industry, and it's quite fascinating. So the way it's acting now, the candle that we're looking at starting off this week, after yesterday's strong candle, you would think if it had the typical weakness that it invariably has after a big move up, that it would have given back a lot more by today. And it hasn't. In fact, it's holding at 235. Yesterday's low was 215. I like it very much. And what I would normally do is I'd open up the chart, I'd expand it I'd give it the space to the right. It's only 5. I'm going to make it 15, just to show you the type of thing that I like to do. This has very much the kind of rectangle formation. It's like a flagpole, and then you can get your flag pattern. It's like the rectangle flag right there. And basically what should happen is, if it holds well, it should make an arch formation, and within the 120-minute chart, I already drew it. I drew it in the 120-minute chart. The 120-minute chart should have an inside Chapman wave buy mode that takes you to an A, and then maybe a B, and then a C. And if it gets to a D, the D should either be very close to, exactly at the 269 high, or just a tad below, and then it should start pulling back. And that will be the test of the longer term, because if it pulls back only gently, and then it starts to break out to the new highs would be above 269, and start to close there, then all of a sudden I'd be able to draw a pattern that is very much like a V-shaped pattern. And that pattern says you've already almost taken out the left side high, but that doesn't matter. It's still a pattern that you want to be looking at. And that says 275, the high of the 24th, would be a very important goal, because if it can do that within, I'll tell you right now, by the 8th or 9th of this month. What are we doing today? Today is why am I blanking out? Today's the 2nd. So if it does it within the next 4 or 5 days, then all of a sudden you're looking at a pattern that says, if I hit 275 and close above it, the next level will be all the way up at 303. So I love the way that it's acting, and I'm so pleased that you brought it to our attention. And also, it is a stock. Now, it's not that very heavy in intraday volume, but by the end of the day, it seems to build up very nicely. So the stochastics at 79%, the MACD is good. I think you've done so. Is there something further you'd like to discuss with us?
That's it, Basil. Thank you very much for giving me the time. Have a wonderful day, and I'll talk to you soon, okay?
Thank you, Brent, and congratulations. That was a terrific trade. Thank you for showing it to us and how you got in and the way you got out. I'll be right back, folks. Dow's down 236.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, don't forget those swim lessons. I should have taken swim lessons as a youth. But anyway, so I had a question, would I expand the chart? Yeah, this is the IYT. You can see this is the transportation index, the ETF. It's just, it's a nice move, but it's nothing compared from 115. Was that a round number low? 115? No, 114.91 was the low of the 20th, and it ran yesterday to 125. Nice percentage gain. What is it? 10 points. And now look what we're looking at. It's pulling back to the 9-period moving average. So it's a stair-step movement with no real height, no momentum to the upside. Okay, now let's just do this. I hope that helped with the expanded chart. Let me see. I'm looking at it over there. Yeah, I can see them even in the small little window for... if you're looking on a cell phone, yes, I'll try to do this. So this is the H pattern failure completely in the IYT. There's that candle with the long wick, that little doji close, not a doji candle, but a doji closed at about the price it opened at. But that wick is very vulnerable because if the IYT trades at 4 points lower into the 118s, suddenly the low of that wick becomes very important. So I had a couple of questions here, and I think I'm going to deal with one of the questions because it absolutely is important. I don't want to. I'm not going to make light of anything, even though we are long, we are very light on the long side. Let's just put it that way. Mostly, I'm trying to play the indexes in double, triple type, so that we can garner as much gain. Very tight stops for a loss. And I don't have to be looking at individual stocks right now. We do have one that's done fabulously. It's a dividend stock, and it's just gone straight up. Now maybe it's going to pull back. I'm not sure. So the question is, so CME says, could you please tell me if I'm on the right track? If the VIX fails right here, then the market rally continues and outcome is to be decided. But so far, it seems to be basing at 20, and the markets will head lower, perhaps to a double bottom or at the January lows. Best case. I had that support as my line in the sand. If broken with conviction, then bull market over. Could you please advise on that theory and improve on it if needed? I was hoping to get SPX 2000 to put on long-term shorts, but may not get my wish. Chris. Hey, Chris, this is what I'm looking at here. I'm going to go to the S&P. Do you mind? I'm just going to go to the spider. Most people can pull up the SPY. They don't always have the information just in front of them to go to the S&P. So the SPY made a load, 181.02 on January the 20th, went to peak A, pulls back, over the 9-period moving average peak B, but then closes that bar under it. So that becomes a peak for the next day. Then has a fabulous move up 3 days ago, on the 29th to the 193.88 level. I should have put that in. That was there. 190, what did I say it was? 194.58 level. Let me just type that in so that we're talking apples to apples. 194.58. Let me just double check on that because I was thinking and talking at the same time. So, this is the last section. We're about to wrap up. So the question is, I'm going to make it real simple. If the SPY takes out the low of the 29th, 189.88, I really want it to be taken out. In other words, if it closes, let's say, in the 188s, anywhere in the 188s in the next 2-3 days, I have to consider that this is a single leg up in the weekly chart, and it's becoming highly vulnerable. That's number one. Number two is if the VIX index, I'm still thinking we're going to go higher, not that much higher, but higher. But I'm, you know me, I'll be very flexible here. If the VIX index by the end of the day starts to get back at 2142, get back into the 22s, watch out below. If it starts to pull back to the 2120s and then under the 21 level, there should be a very nice rally again towards the close of the day. That's the way I'm looking at it. I'll be back with Tom O'Brien later. Have a great day. Otherwise.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.